I welcome you all for today's session, Advanced FL. And for today's class, we'll be looking at operating segment. That's IFRS 8, IFRS 8. So I start with defining what's operating segment. And an operating segment is just a component of business which engages its business activity from which it may earn revenue and incur expenses, and whose operation is regularly reviewed by who we call the chief operating decision maker. So one component tumesema that is just a component of business which engages in business activity from which it may earn revenue and incur expenses, and whose operations will be regularly be reviewed by the chief operating decision maker. Now let me give you an illustration of what we call an operating segment. So for example, let me give you an illustration of Nation Media. So for Nation Media, they have the television department, they have the radio department, and also they have the newspaper department. So each department stands for its own. It's what we call a segment, of which, you see, it's just a separate component of business, of which they're engaging in business activities, and then on which they earn revenue and incur expenses, and then whose operation will be regularly reviewed by the chief operation decision maker. So we can say the departmental manager. For example, you go to the radio department, there is the head there. The television department, the same, there is a head there or the manager there, as well as if you go to the newspaper. Now that's what you call an operating segment. Also, for example, I can give you another illustration. If we talk about like Nairobi University, in Nairobi University, we have School of Business, also we have the School of Medicine, School of Law, School of Education. Now, those are what we call segment. Good. So in that case, now let's go, I show you how to present, on how to prepare the segment report, how do we present, how do we include them in the financial statement, and then we look various types of operating segment. So an operating segment, let's write something here, is just a component of a business which engages in business activities from which it may earn revenue and incur expenses. And of which, we are saying of which operation they are regularly reviewed. And they are regularly reviewed by chief operating decision maker. Now, this definition I have given you definition as per IFRS 8. So in case an examiner asks you to define operating segment, so this is how you need to define it as per the IFRS 8. And I have given you an illustration. One example from operating segment, also we can say like tumesema UON, also Nation Media. Also we can say EABL, of which the EABL produces various products. For example, we have Tasker there. Also, we have what else? We have White Cap and others. So you found that each product stands for its own. It's what we call an operating segment. So we have the Tasker segment, we have the White Cap segment, etc. Now that's what we call an operating segment. And usually have two types of operating segment. Types of operating segments. They are classified into two. Number one, we have what we call service segment. And also, we have geographical segment. Now, for the service segment and geographical segment, you see for the service segment, it's like, for example, what I have given you for nation media. We have the television department, radio department, and the newspaper department. Now, that's what we call service segment. They are classified based on the services they are offering. So, in this case, I'm saying that it's just a distinguishable component of an entity which engages in providing related output or achieving a particular operating objective consistent with the overall mission of the entity. Now, that's what we call service segment. Hii tumesema hapa. For example, tumesema Nation Media, they offer various services. We have the radio division. We have TV division. Also, we have the newspaper division. Now, those are what we call service segment. You have identified them based on the service they offer. Then, for geographical segment, you identify the segment based on the geographical or the locational aspect. For example, let's go to the UN. UN, we have the one in Nairobi. Kuna ile iko Kisumu. We have another one maybe in Mombasa. The same. Or, for example, EABL. Now, EABL, if we classify it geographically, we have EABL Kenya. We have EABL Uganda. We have EABL Rwanda. And also we have EABL South Sudan. Now, that's what you call geographical segment. The service segment, for example, EABL, if you classify it based on the service, but ndio tumesema kuna Tusker, we have White Cap, etc. Yeah. Now, those are the two major classification or the types of segment: the service segment and the geographical segment. So we look another part on how to identify a reportable segment. Identifying a reportable segment. How can you identify that this is a reportable segment? So, a reportable segment can be identified using the following criteria. And one of the criteria is that, number one, has been identified through the definition of a reportable segment. Yeah, based on this definition I have given you. So that's one of the criteria you can use to identify a reportable segment, that it has been identified through the definition of a reportable segment. Number two, also you may look at what we call the quantitative threshold that has exceeded quantitative threshold. When you talk about the quantitative threshold, this one can be classified into three. One is that its reportable or its reported revenue is at least 10%. So I mean that its reported revenue is at least 10% of the total segment's revenue. So that's where you can identify that it has its reported revenue is at least 10% of the total segment revenue. Or number two, its reported profit is at least 10% of the total segment profit. And lastly, its reported assets, are at least 10% of the total segment assets. Yeah, when you talk about the quantitative threshold, we're looking at those three items. Its revenue, its profit, and the assets. In that, its revenue or profit or asset should be at least 10% of the total respective, either revenue, profit, or the asset. Now, those are the four criteria you can use when identifying a reportable segment. We have said number one is that you can identify a reportable segment through its definition as per IFRS 8, or the quantitative threshold aspect, in that its reported revenue is at least 10% of the total segment revenue, the same with the profit, the same with the assets. Good. So I want to erase this. So for those who are taking screenshot, you can take that. So now I want us to look at something else. The approaches we use to identify a reportable segment. So what are the approach can we use to identify that this specific business qualifies to be a segment and the other one does not qualify to be a segment? So approaches of identifying a reportable segment. And there are two approaches we can use. And one of the approaches we can use is what we call risk and return. Risk and return approach. And number two, we have what we call the managerial approach. Those are the two approaches you can use to identify a reportable segment. So, and don't confuse how to identify reportable segment and the approaches. They are totally different. So, starting with the risk and return approach. In this case, the identifiable or it identifies segment on the basis of different risk and return from different line of business. So you are saying that in this case, segments are identified on the basis of different risks and returns from various line of businesses and their geographical area. So in this case, so the major aspect rule in this case is just the returns and the risk. Then under managerial approaches, in this case, is the manager or the top management who will identify this qualifies to be a segment, the other one does not qualify to be a segment. So we are saying that in this case, segments are identified based on the information reported about them. So, and then we are saying that this means that the management defines a reportable segment. Now that's the difference between the two. The risk and return So in this case, use the quantitative analysis or the scientific analysis of which you are comparing between the risk and the return. From the risk and the return, now from there you can be able to identify this one qualifies to be a segment, the other one does not qualify to be a segment. But for the managerial approaches, in this case, the top management has the power to review the information reported about that specific entity or department. And then from there, they can define that this one qualifies to be a segment, the other one does not qualify to be a segment. So that's the difference between the two. Then for the risk and the managerial, they have both advantages and disadvantages. So the advantages and disadvantages, you read them from the handout. We'll share later. So that one, I'm not going to discuss them there. So those are the approaches used to identify a reportable segment. Good. Now, let's look at what we call now the disclosure requirement. Disclosure requirements. Yeah, for reportable segment. So now for the disclosure requirement, we can also call them the content or the elements of a segment report. Now, when preparing a segment report, what are we supposed to disclose about, or what are we supposed to show the content of the segment report? So the following items should be disclosed. So the following items are disclosed. Number one is that you have to show the revenue. Number one, you show the revenue. Now, for the revenue, you have to show revenue from both the external. You show the external revenue as well as the internal, or what we call intersegment revenues. Also, you have to show the profits. Also, the profit you have to differentiate. The profit you get from the external revenue, the external profit, or the profit you got from the external revenue, as well as the intersegment profits. Then number three, also you need to show the assets. Also you need to show the liabilities. Also you need to show major expenses such as admin and general, no, you don't show the general expenses. Admin expenses. Also, you have to show the income tax. Maybe you can show the interest, income, also the interest expense. You can also show the depreciation or the impairment or amortization. Yeah, like that. And also you can show other incomes, maybe from other sources, and also other expenses. Other expenses, like that. So those are some of the disclosure requirements you need to show when presenting a segment report. You show the revenue, and we have said that for the revenue, you have to separate from both the external and from the internal. The same for the profit, from the external and internal. You show the assets, liability, admin expenses, income tax, etc. So those are some of the disclosure requirement or the elements you need to show when presenting a segment report. Good. So now we can look at something else. So now when presenting the segment report, assuming we had like 4 segments, after you present the segment report, you also need to reconcile. And now the reconciliation statement should be in agreement with what we call the group account or what the entire entity had reported. So how do we, what are the items do we show or how do we reconcile? So how do we reconcile those segment report? Or what are the items do we usually reconcile when presenting the segment report? So we are talking about the reconciliation statement. Now, when showing the reconciliation statement, we are saying that the item in the statement of the financial position or the income statement will be reconciled with the segment report. And how do we reconcile? So items to reconcile. Yeah. So in a reconciliation statement, we have 4 items we usually show. Number 1 is the total reportable revenue. Total reportable revenue to the entity's revenue. That's one. Also, the total reportable profit or loss to the entity's profit or loss. Also, another item is the total reportable assets to the entity's assets. And lastly, total reportable segment liability to the entity's liability. Yeah, I mean total reportable segment. Here we have segment. Yeah, is the total reportable segment, revenue, profit, assets, and liability. Actually, those are the items we show, or the item we show in the reconciliation statement. The revenue, the profit or loss, assets, and the liability. Then we say that we have both the service segment and we have the geographical segment. Now, how you present the service segment and how you show the geographical segment report, they are totally different. So let's now look at the information for geographical segment. Now, when presenting a geographical report, what are the items do you usually show? For the geographical segment, only 2 elements are included. So we are saying that a segment report when you talk about the segment report, we are talking for the geographical segment. Yeah, for geographical segment should include the following 2 items. Number 1, the non-current assets. Non-current assets. And number 2, revenue from external customers. From external customers. Yeah, those are the only 2 items which should be reported when presenting a segment geographical report. Good. So now we are ready to do a question. Let's try an illustration. Take out your past paper and you open June 2011. June 2011, question 3A. So that's the question. Yeah, we are doing that for Wema Group. Wema Group Limited is a distributor of 4 products, P1, P2, P3, and P4. The management of the group has identified each product as constituting a reportable segment, namely segment P1, P2, P3, and P4. The management has also identified countries of operations as country C1, C2, C3, C4, and C5. Yeah, those are for the country, that's what we call the geographical segment. The service segment, we have P1, P2, P3, and P4. In the geographical segment, we have C1, C2, C3, C4, and C5. The following is a summarized set of financial statements for the group for the year ended 30th September 2014. So we have Wema Group Limited, the income statement we are given there. Now that one is irrelevant to us. Then we also given the statement of financial position there. So that one is irrelevant. We have said June 2011. Which question are we doing here? It's June 2011. Oh, sorry for that. That's a wrong question. It's June 2011. Yeah, I'm there now. Yeah, the one we have been doing was December 2014. That one we'll do as an assignment. Watch to find this one. It's the same question. Yeah, June 2011, question 3. So Platinum Group operate in the media industry, but some of its subsidiaries operate. Hoping we are there. Yeah, Platinum Limited Group operates in the media industry, but some of its subsidiaries operate in the mobile technology and soft drink sector. The management has identified reportable segment as print media, mobile technology, soft drinks, and others. The following is a summarized financial statement for the year ended that 1st May 2011. So we have that, the income statement, also we have the statement of financial position. So let's go to the additional information. For the purposes of preparing the segment report, the management has provided the following details from the income statement. And from the income statement, we have the segments, we have the revenue, inter-segment revenue. We have segment profit before tax. Also, we have inter-segment profits. Other details of income and expenses are as follows. So we have other incomes, that's the interest. We have interest expense, depreciation for PPE, and then we have amortization for intangibles. Number 3, a summary analysis of assets and liability for the segment is given as follows. So we have the segment assets and liabilities. The group also operates in several East African countries, and a summary of its financial information is given as follows. Now, those in East African countries, those are what we call the geographical segments. We have Kenya, Uganda, Tanzania, Rwanda, and others. We have the revenue and we have the non-current assets. If I take you back, remember we said that when presenting the geographical information, only two items are shown. Number one was the revenue and the non-current assets. That's only the two items or elements we present when presenting the geographical segment report. Required, number one, a segment report for the group that would be presented in the notes to the financial statement for the year ended that 1st May 2011, 8 marks. And number two, reconciliation statement for revenue, profit or loss, total assets, and liability. I remember we have said that when presenting the reconciliation statement, only four items are reconciled: revenue, profit or loss, assets, and liabilities. Good. So now let's present that. Number one, we start with the reconciliation, the segment report, and then we reconcile the statement. So how do we prepare the segment report? Remember, I had already given you the content or the disclosure requirement. So this is June 2011. Question 3B. So it's Platinum Group. Operating segment report for the year ended. That 1st May 2011. And then we have various segments. We have 4 segments there. So we have various segments. Yeah, we have the print media, mobile technology, soft drinks, and others. Those are the 4 segments we have. So we have print media. Then we have mobile technology. Then we also have soft drinks. And also we had others. Then after that, I want to combine the segment report and the reconciliation statement. When reconciling, so you show the reconciliation, and then you present the totals. Yeah, like that. Let's go to additional information number 1. Number 1, you are told that for the purposes of preparing the segment report, the management has provided the following details from the income statement items. So we have the revenue, inter-segment revenue. Then we have the segment profit before tax, and we have inter-segment profit. So how do we present that? So we start with the revenue. And for the revenue, you have to separate from the external revenue and the inter-segment. Then you can have your total revenue. The same for the profit. We said for the profit, you do the same. The profit, you have to separate both from the external customers profit from the external customers, and the intersegment profit. And then you have the total profit. So first of all, let's start with that. So we have the revenue here. Now this revenue provided here, this is the total revenue. And then you are given the intersegment revenue. So when you're given the total revenue or you're given the revenue and you have the intersegment revenue, so what you need now to know is the revenue from the external sales. So we are given the total revenue there. And for the print media, we have 2250. The other one we have it's 1600. Soft drinks was 1150. The other one was 500, the others. Then you are provided with the intersegment revenue. For the intersegment revenue, for the print media, we have 250. We have 100, 125, and we have 25. Now with that, now we can be able to get the revenue from the external customers. So you take the total revenue 2250, you subtract the intersegment. So that means the external revenue was 2000. So 16, that is the total. You eliminate from the intersegment. That means the revenue from the external customer was an amount of 1500. 1150 minus 125, you get 1025. 500 minus 25, you get 475. Then we do the same for the profits. For the profits, we do the same. And for the profit, you are given the segment profit before tax, and also you are given the intersegment profit. So can you be able to get the profit from the external customers? So the segment profit before tax, you are given 750 for the print media. We have 350, 200, and 150. And then you also provided with the intersegment profit. For the print media, it's 50, 25, 15, and we have 10. Now, we need to get the external, the profit you got from the external customer. So you take 750, you minus from the internal. So that means from the external was 700. 350 minus 25, you get 325. 200 minus 15, you get 185. 150 minus 10, you will get an amount of 140. So we are through with additional information number 1. Let's go to additional information number 2. Number 2, other details of income and expenses are as follows. So we have the segments, we have other income, that's the interest, we have the interest expense, depreciation, and amortization. Remember, those are some of the disclosure requirements you need to show. So also for them, you have to show them. So tumeona we have other incomes, of which we have interest. And for the other interest, we have 100, 50, others haikuwa. Then you add the total. That's 250, unaleta kwa total. Then we also have interest expense. For the interest expense, we have 50, 50, 30, and 20. Then you add the total, and the total is 150. Also, we have depreciation. Depreciation, we are given 30, 20, 20, 10. And the total, that one you get 80. And another expense, you also given amortization. For the amortization, we have 20, 5, 5, 5. And the total, it's 35. Another thing you need to note here, for example, here we have interest income. Now, this other income, we make 100. Then we have interest expense, depreciation, and amortization. Remember, those are the outflows. You don't show a negative here. Remember, this is not a it's not a financial statement. It's just a report. For the report, what you usually do, usionyeshe negative. Provided you have written it's an interest expense, just show the amount. Don't show it as a negative, because it's an expense. No. For the report, you just show the amount. So that was note number 2. Let's go to note number 3 now. So we are through with number 2. We have shown the interest income, interest expense, depreciation, and amortization. Number 3, a summary analysis of assets and liability of the segment is given as follows. So we are given now the assets and liability. Now let's present that, the assets and the liability. Now for the assets and liability, we have for the print media, mobile technology, soft drinks, and then for the other segment. Then we also given unallocated. Now, for this unallocated, either assets or liability, they are the assets or the liability which are for the general or for the whole entity. For example, if you go, for example, to Nairobi University, those are the assets for each department, School of Business, School of Nini, then for the unallocated, it's an asset which serves all the segment. For example, you may have a university bus. Now, university bus, hakunanga ile at School of Medicine, School of Nini, no. So it serves the entire university. Now, that's what you call unallocated assets or a liability. So we show that. So tuko kwa assets. So we are through with other income and expenses there. So you can show that. Now we go to the assets. For the assets, we are given for the print media, it's 2,500. We have 1,500, 1,000, and for others, we have 1,000. Then we have unallocated. Unallocated. Now for the unallocated, you report it to the total. So an amount of 500. Now let's add the total assets. 2,500, you add 1,500 plus 1,000 plus 1,000. And the total you get 6,000. So that means your total assets, it's an amount of 65. So those are the total assets. Also, you are given the liabilities. So liabilities, this is 500, 750, 200, 200. And then you also given the unallocated liability. So you bring unallocated. For the unallocated, you report it to the total column, which was an amount of 350. So let's add the total liability, 500 plus 750 plus 200 plus 200, and you get an amount of 1,650. So that means your total liabilities, you'll get 2,000. So that's how you present the segment report. Now, the second part, we are supposed to show a reconciliation statement. And I want us to present it here. How do we show the reconciliation statement? We said we reconcile 4 items: the revenue, profits, assets, and liability. So already we have reconciled assets and we have reconciled liability. Tukuje hapa for the assets. You see, for the assets, tukuje hapa kwa assets, you have taken the total assets of which you have 6,000 and then unallocated 500, and the total you have is 6,500. Now, this 6,500 should reconcile with the assets in the statement of financial position. Now, let's see if the same. Let's see if it's the same. You can't just come here to the non-current, to the assets. Unakuja kwa total assets. This was a statement of financial position. And then for the total assets, it's an amount of 6,500. Now, this 6,500 should be the same with the one in this segment report. And it's this one we have gotten here, 6,500. Then, for the liabilities, we have already reconciled, because the total liability was 1,650. You add an allocated, which was an amount of 1,350. So 1,650 plus 350, you get 2,000. Now, this 2,000 should be the same with the total liabilities in the statement of financial position. So let's confirm that. Yeah, there it is. So for the liabilities, we have non-current liability of 500, and then we have the current liability, total is 15. So if you take 500 plus 15, you get 2,000. Now let's go back to the remaining two elements. For the remaining two elements, we have revenue and we have the profits. How do we reconcile that? So let's reconcile that. Tuko hapa kwa revenue. Now this is what you do for the revenue. This is how you reconcile. You add the total from the revenue, from the external. Revenue from the external, you add the total. Ulete hapa. You add 2,000 plus 1,500 plus 1,025 plus 475. And what do you get? So in that case, you get 5,000. Then you add the intersegment. Intersegment, you add 250 plus 100 plus 125 plus 25, and that is 500. Now, for those who are in my class, when we are doing the group account, if I just take you back to the group account, remember I say that to the group account, revenue, or what we call intergroup revenue or intergroup sales, should be eliminated in full. In short, we only show the revenue from the external sources. Now, this is what I mean. If you take 2,250 plus, I'm working with the total revenue. Total revenue, take 2,250 plus 1,600 plus 1,150 plus 500. Give me the total. Just give me the total. Yeah, the total is 5,500. But of this 5,500, now, tuangalia hapa, this is how we reconcile. The total we have gotten is 55. So this is how you show. It's 55, but remember of the total sales, kuna hii ya intersegment. That's what we call intergroup sales. That we say intergroup sales should be eliminated from the revenue. So uonyesha this 500 hapa, but as a negative. So now it will be 5,500, that's the total. Then you eliminate the intersegment revenue of 500. Na utapata ngapi? 5,000. And that's why if you take this 5,000 to the total column, you are still getting 5,000. So now let's compare. If the total here is the same one as the total for the platinum group, or the one reported in the income statement. Tuone kama ime reconcile. For the income statement, the revenue was an amount of 5,000. That's what we show. If you add the total, you get 55. But of that 55, kuna what we call the revenue within the group. That one you eliminate. That's what we call the intergroup. You eliminate that one and you get 5,000. Kama haukushika hiyo, you can also understand for the profit. Shika ya profit. You do the same. Also for the profit, you do the same. You add from the external customer 700 plus 325 plus 185 plus 140. What do you get? So that one will get 1350. Then we have intersegment. Now, intersegment profit in group ndio tulikuwa tunaita unrealized profit, the profit which is within the entity. That's what we call the unrealized profit. And we say that unrealized profit also should be eliminated. This is what we do. You come to the intersegment, you add the total 50 plus 25 plus 15 plus 10, and you get 100. Hii 100 unaileta hapa chini kwa totals, but you show it as a negative. That means we are eliminating it. In that, if you are getting the total profit, I want you to take 750 plus 350 plus 200 plus 150. Up to that, you give me the total profits. How much are you getting? 750, 350, 200 plus 150. It's 1450. But of this 1450, we have profit equal within 100. Then you minus 100. If you minus 100, you'll get an amount of 1350. Good. Now let's compare that against the profit before tax in the statement or on the income in the income statement. So from the income statement here, we have the profit before tax. Yeah, an amount of 1350. It should be the same. Na hiyo tumemaliza sasa. So we have done part A and part B. Yeah. Number 1 was a segment report. We are through with that. And then number 2, you're supposed to show the reconciliation statement for both revenue, profit or loss, total assets, and liability. So we are through with that. In some cases, also the examiner may require you to show the geographical report. Now, assuming the examiner wanted even the geographical report, how do you show the geographical report? This is how you show the geographical report. So we have, so I'm presenting a geographical statement. Geographical segment report. Remember, under geographical segment report, only 2 items are reported. So, ngekuja platinum group, and then we are showing geographical segment report for the year ended. For the year ended. It was 31st May 2011. So we are told that, let's go to note number 4. You are just copying what you are given number 4. Number 4, you are told that the group also operates in several East African countries, and summary of its financial is given as follows. So we have Kenya, Uganda, TZ, Rwanda, and others. We have the revenue and we have the non-current asset. Actually, I'm just copying what we are given there. So you show the countries. Then we have the revenue. That we say my revenue, it's only you show for the external revenue only. And then we have the non-current assets. Country, we have Kenya. We have Uganda. we have Tanzania, we have Rwanda, and we have others. Then you can show your totals. For the revenue, you are given as 3,000, 500, 500, 400, and 600. Then you can have the total. And the total here, that's 5,000. For the non-current assets, you have 1,500, 1,000, 500, 250, 250, and the total is, that's 25.3, yeah, so how much is the total? The total is that 500, eh? Yeah, that 500. And if you compare your revenue, tumeona your revenue here, you see the revenue here for the geographical is 5,000, and non-current is that 500. Let's compare that. Eh? If you come to the income statement, the revenue is still 5,000. Then tumeona non-current assets is that 500. Tukuje hapa, non-current assets, it's that 500. So that's how you show that. So tuandike assignments there. Assignment. December 2014. So I want you to go and try that. Eh? December 2014, question 4C. Yeah, question 4C. Yeah, it's that question. Eh? It's the one that we had led before. Eh? Yeah, that one. For the WEMA group, eh? We had given the income statement. We also given the statement of financial position. Now let's go to the additional information. Additional information. We are not doing it, it's just your assignment. Eh? So additional information number one, you're told that the total depreciation for PPE was 120 million. A portion in the ratio of 1.5 is to 2 is to 1.5 is to 1 for product P1, P2, P3, P4 respectively. So when showing the segment report up, yeah, like this. Eh? Remember we have a depreciation there of 120. So utachukua that 120, then your portion P1, P2, P3, P4, your portion like that. Eh? Then number 2, detail necessary for preparation of segment report in relation to revenue and respective segment profits were as follows. So you have the segment there. We have the revenue, inter-segment revenue, segment profit before tax, and then we have inter-segment profit. Number 3, other income and expenses was as follows. So we have segment, we have other income, interest and commission. Then we have the cost of finance, that's the interest. Eh? And then we have amortization of intangibles. Then number 4, the summary of assets and liability of the segment were as given below. So it's on the assets and liability. Eh? We have assets and we have liability, including the unallocated. I've shown you how to account for the unallocated. Then number 5. The following is a summary of financial information relating to revenue and non-current assets within the countries the group operates. That's the geographical information. Eh? We have country C1 up to C5, the revenue and the non-current assets. It's the same question. With reference to IFRS 8 operating segment, prepare. Number 1 is the segment report and number 2 is the reconciliation statement. So we may try another question. Open December 2017, question 5B. December 2017, question 5B. Yeah, hoping we are there. So we start with question 5A. You see if you can get the whole 20 marks. Highlight 6 examples of unethical behavior by the management of the business entity, which professional accountant should report about. So that one I'm sure you have run through audit or SGE, section 5. So what are the unethical behavior by the management of which an accountant, a professional accountant should report about? So when you talk about professional accountant, it's not just an accountant. Also, the auditor is a professional accountant. And then you have to differentiate. In this case, they are unethical behavior committed by the management. Then, if they are committed by the management, that means you cannot report to the management. So the examiner wants here, what can you report either to the board, BOD, or to the non-executive director, or to an external entity? So I'm sure for those who have done auditing, either section 4 or section 6, you as an accountant, you are not supposed to report to the external entity unless, so that unless, unaweka 3 points hapo, maybe kuna fraud there, we have tax evasion there, in case there's money laundering, hizo ni tatu nimempea. Also manipulation of financial statement. Now, for the manipulation of financial statement, you need not to report to the external entity. So get that. Manipulation of financial statement, you don't need to report to the external entities. When you talk about external entity or the relevant bodies, relevant bodies such as KRA, also you can report to ISPAC, also you can report to EACC. So, but manipulation of financial statement, that one you report to either the BOD, is the management involved, or if kama board wanajua, also you can go, okay, in case they are just executive director, they're involved, you can also report to the non-executive director. Good. So you get your 6 marks. Hapo ni kuagio tu na kufikiria kidogo. Kama hufikiria hutapata kitu. Let's go to part B. With reference to IFRS 8 operating segment, outline 4 disclosure requirements for a reportable segment. Now, this question during this sitting, 80% of the students failed that. 80%. That means only 20% could get it. And I'm sure hata nyinyi 90% wangeanguka hiyo, kwanza nyinyi. With reference to IFRS operating segment, outline 4 disclosure requirement for a reportable segment. Mngekuwa umeanza kujibu, hata kama utaki kunijibu, jiambie which are they. Don't go back to the notes. I want you to think, because in my introduction nilielezea vizuri. So what are those disclosure requirements? So I gave out on how to identify reportable segment, of which it has been identified by the definition of IFRS 8, or has exceeded quantitative threshold, either 10% of either liability, not liability, revenue, profits, or assets. Is only how to identify reportable segment. But in this case, the examiner wanted the disclosure requirement. Disclosure requirement tulisema kuna assets, kuna liability, we have profit, we have revenue. Also, we have interest income, interest expense, admin expenses, other income, other expenses, tax expense, hizo zote. So that's what the examiner wanted. You get your 4 marks. Let's go to part 2. The following information was obtained from the financial records of Superfood Group for the year ended that 1st October 2017. So we have the consolidated income statement. Hiyo kwetu ni relevant. We only use this consolidated financial statement only to confirm if our reconciliation is correct. So we have the income statement there. Also, we have the consolidated statement of financial position. Let's go to additional information number 1. Number 1, for the management purposes, the business is organized into 5 operating segments. We have retail, catering, manufacturing, publishing, and others. So those are what we call the service segment. Number 2, details of the operating segment are provided below. We have the revenue, total revenue, and intersegment revenue. So kwa hivyo hapo utafute the external revenue. Then number B, you are given the operating profit. Now, under operating profit, I want to go back to part B. Operating profit, you're only given the total. Haujapewa intersegment. Why? If you're not given the intersegment for each, that means the intersegment profit could not be identified individually. So the one we have done, we already given the total at the intersegment. So it's easier for you to get from the external profit. But in this case, we're not given the intersegment profit. That means they could not be able to identify for by each or individually for each segment. Then number C, segment assets and liability. So you're given there. Then number 3, intersegment profit amounted to 42.23. So in this case, intersegment profit, you are given in terms of total because they could not have identified them as per segment. Required segment report as far as information provided above allows, according to International Financial Reporting Standard 8 operating segment. So we present that. So the operating segment there. You see, under our segment, we have how many segments? We have retail, catering, manufacturing, publishing, and others. So let's show that. So this is superfood. We have operating segment report for the year ended 31st October 2017. So we have retail. Also we have catering. Also we have manufacturing. Also we have publishing. And then we have others. Then you reconcile. Then you get the totals. So let's start with revenue. Now revenue, we have both from external and then we have internal. And then you can get the total. Note number 2, you're given information there. Number 2A, details of the operating segment are provided as below. So we have total revenue and we have intersegment revenue. So for the revenue, for the total revenue, you have 129,842. We have 66,853. 39,495. that 2, 306, and that 7, 447. Then we also given the inter-segment revenue. For the retail, hakukuwa na any. For the catering, we have 74.65. Here we have that 6,791. Publishing, there was none. For others, we had 56.63. Then from there, we can get revenue from the external. You just take the total, you minus the intersegment or the internal. So 129 minus that, so this one will remain as 129,842. So this one is 66,853. You minus 74.65. So you will get 59,388. That 9,495, you minus 36. This one you get 27,04. Inabakia that 2,306. And here you'll get that 1,784. Now let's reconcile directly. Let's just reconcile. Under reconciliation, you just add the total revenue from external, uongeze zote from the external, and you'll get 256. That's 256. Let's add it again. Yeah, 256,024. Then from the internal, you just add the intersegment. The intersegment, unaileta kwa reconciliation, which was an amount of 49,919. Under the total, you bring the intersegment, 49,919, you show it as a negative. And then you take 256,024, the total, which is 256,024. So it's just you add the total, you minus 49,919, you get 256,024. Now, if you compare that one against the income statement given there, tuone kama ime reconcile. Under that, we can look at revenue. You see the revenue here? From the sale of goods, services, rent to income. Our revenue is 256,024. Then we go to the profit. That was note number 2. But for the profit, we are not given the intersegment. We are only given as total. So what we do for the operating profits, for the retail was 68.87, 47.16, 12.83. Then we have 11.69, and then we had that 2.84. That's what we are given. Now, can you add the total profit? Add the total profit given there. If you add the total profit given there, so what are you getting? Yeah, 17,339. Then let's go to note number 3. Note number 3, you are told that intersegment profit amounted to 42.23. So of that total you have gotten, sasa toa hii intersegment, you eliminate 42.23. How much do you get? You minus 42.23. So unakuja hapa kwa reconciliation, you deduct the intersegment 42.23. And what do you get? So if you deduct that, you should be getting 13,116. 14,116. Yeah, and if you compare your profit before tax from the income statement, yeah. So we have, where is it? Yeah, profit before tax, it's 13. 113. So we go back. Let's go to note number part C. Yeah, segment assets and liability. So you're given assets and liability. So tukuje kwa assets. And for retail, we have 50, 152. Here we have 45, 145, 24, 620, 14, 165, 23, 829. And also we are given the investment in associate. Now, investment in associate, that one is the same as unallocated. You take it to the total. So investment in associate, you just take it to the total. Remember, it's the entire company which invests in associate, not the segment. 764. Now, if you take the total assets, 51, 52 ongeze zote, so that one you get 15, 157, 911. And then you add so that you can get the total assets. So just take 157, 911, you add 764. So what do you get there? That's 158, 675. Then we also given liabilities. So for the liabilities, we have 14, 839, 97, 83, 3609, 4704, 34, 175. For the liability, we didn't have any unallocated. So that means you just add the total and you'll get 67, 110. And that's how you present the segment report. So in case you have a question, so you can raise your hand there. So I give you an opportunity to ask a direct question. I want to give you another assignment, hata kama hamtafanya, because hamfanyangi, lakini uzuri hiyo ni shauri yenu, si yangu. June 2012, question 4. Yeah. Go and try that. Na hizo ni optional. My assignment now zimekuwa optional. Ukisikia utafanya, fanya. Ukisikia utafanya. Haya. Utakuwa opening balance next semester. So kindly avoid that. So now that question, June 2012, question 4A, the entire question had 20 marks. For example, question 4A, IFRS 8 operating segment is based on the core principle that blah, blah, you are given all that information. Let's go to the required, number 1. Define the term operating segment as used in IFRS 8. Una define hiyo. Then number 2, describe the condition that an operating segment must meet for it to be deemed a reportable segment under IFRS 8. Na nimpea 4 condition. Tuende number B. Evaluate advantages and limitations of the following approaches of identifying a reportable segment. 1 is the risk and return approach. And then we have the managerial approach. And then you find a part C. Part C is all about segment report. Like that. So in case you have a question, right, can you raise your hand? Evans.
Yes.
It's your turn now.
Good evening.
Evening.
Thank you for so much for the lesson. I had some questions.
Go on.
The first one is about the question that we have presented, where we are required to present the report and the reconciliation. We have done it in one document. Will it be marked correctly that way, or we have to separate the reconciliation from the report?
Now, what I'm showing here, this is how you are supposed to present. Just present as one. Eh?
Okay.
Yeah, that one is part 1 and part 2. You have shown 2 statements. Eh? It's not a must you prepare. It's not a must you have to prepare the first one and then you repeat the same for the second one, only to show the reconciliation statement. Just present it as one.
Okay.
Yeah.
And then the marking points are the same as the other documents.
No. The marking, eh? Now for those statements, this one is not a financial statement. For the others, you see, for the cash flow, for the published financial statement, income, those one we mark the entries. Now for this one, for accounting for asset and liability. So during the marking, they develop their own on how they'll mark. They can determine if they have 8 marks, they mark 16 ticks. Eh? So they take 16 times a half. So they may depend on that. Eh? And in case most of the students have failed, every tick can give you 1 mark. Eh? Regardless, ni gani umepata, ni gani umeanguka.
Okay.
Yeah, you want to work smart, eh?
Yeah, lastly, the question you have just given us, the one that had 20 marks, we have cases where we are given 4 marks, but in the question they have not specified how many points you give.
Yeah, if you are given 4 marks, for example, if you are told to explain what's an operating segment, assume that, eh? And then you are given 4 marks. Cheza na Kiingereza hapo, eh? You don't just define kidogo tu, just define and give illustration. So sometimes you may base your answer based on the marks given. Eh? Yeah, kama umepewa 4 marks, usiandike kitu just 1 line and then expect to get 4 marks. But in some cases it may happen. Eh? But this one is not like audit. In audit, you can explain, you have to explain. Sometimes in this computation like AFR, they can say explain 3. You just state 3 and you still get 6 marks. Eh? So that's another advantage in computation. Hii hainanga shida sana, but I've sijasema usi explain, ukiambiwa explain.
Okay.
Yeah.
Thank you.
Karibu.
Okay.
Good, thank you. So that's the end of today's class.